Joining us now, Sylvia Jablonski, Defiance ETF CEO, CIO, and co-founder. Sylvia, great to have you with us. The S&P is up 3% since last Monday's big sell-off. Are we getting complacent? Should we expect more volatility? We see all sorts of stats saying if the VIX, breaks out, closes above 35, it's going to take 170 trading days in order to get back to the median. I mean, what should we expect?
Good morning, Melissa. Thanks for having me here. Well, I think that we should expect some volatility, at least for the next month or two. We had some shaky data about jobs numbers a couple weeks ago. We had the Japan carry trade kind of fall apart, and I think that led to some unsettlement in the market. But I think this week's data will be key. We'll see what happens with inflation and, where that likely leads the Fed. And if the market gets a sense that rates are going to be cut, we can kind of go back to thinking that, okay, unemployment is actually pretty stable. The consumer remains strong. GDP is between 2 to 3%. Corporate earnings are decent. So I think that we can end up with a positive year this year, but probably some volatility for the next month or two.
If CPI comes in a little hotter, that's very complicated, and the markets will be completely offsides on that.
Yes, absolutely. I think that the market will absolutely react to that. We'll probably get a pullback across most of the indices on that, and that'll lead to trepidation for investors to come back into the market. But what I would say is that if you have long-term conviction on the Mag 7 and on some of these new innovative trends in technology, whether it's the growth of AI, supercomputing, quantum, things like this, these pullbacks are opportunities to buy on the dip. I always say that it's like a broken record, but dollar cost averaging is absolutely wonderful when you get these big pullbacks. It's hard to look at your account in the short term, but pick your spots on equities with these pullbacks.
Do you have conviction in the Mag 7? I mean, that was there were sort of those three things that all came together last Monday. It was the economic slowdown, it was Japan, and it was the idea that we're not getting a return on investment from investments in AI. Do you think that we will, and do you think that was overblown?
Yeah, I think that we're impatient as a society. AI is something that we really just started talking about, even though it's been around forever. The ChatGPT moment is when we all kind of piled into NVIDIA and things like this. It takes time to build things and to get them to work and to deploy them across different sectors. So I think that the spending that these companies are doing is indicative of the demand and the potential in the space, but it's going to take some time before we see that play out in revenues and profits and the efficiency changes across the different sectors. So I am very much a buyer of Mag 7. I think that this is the next tech industrial revolution that we've been waiting for, and it's going to play out in the next 5 years or so.
Are you confident about the demand part of the equation? Because we don't have revenue numbers, for instance, on Copilot from Microsoft, or is it a case of trust us, we'll build it, and people will come? Because I think investors last week and over the past 3 weeks of our earnings season are really thinking maybe that's the case. Maybe they're building, and we don't really know what the payoff is going to be.
We don't know what the payoff is going to be, but I think that we're starting to see that there could be utility there. And when there's utility, there's eventually payoff. I can tell you as a firm that we're using AI for a whole lot of things that have cut down our costs, made us more efficient as providers, like product discovery, like compliance costs, just looking at the competitive landscape, trying to figure out.
Meaning you've actually decided to hire less people, or you've actually fired people so that AI can take those roles? When people say that, I'm trying to understand it explicitly.
Yeah, well, okay, so I think that we have spent less money on outsourcing for data and research, for example, because we've been able to use AI to scour the market and do some competitive analysis that has actually, in some cases, been more effective in some of the data we've paid for in the past. So, I think that if we start to cut costs on different projects that we're working on, that that.
And are you using just ChatGPT straight, or you have a customized version where you're, using it on certain data sets that you bought separately, or what are you doing?
So kind of all of the above. We're working on some things internally that will be our own proprietary type of information, but. Okay. Yeah, we've used the different resources out there. I think everybody uses ChatGPT for something these days, whether it's to edit, grammar check, whatever it might be. Hopefully, you're not cheating in school or using it for those reasons. But I think it's wildly helpful for research at this stage. And I can think about, like, if I were a drug company, having more information about, drug trials, different outcomes that other drugs that my competitors are working on are having. And I think that helps me, become more efficient. I just think that the utility of this is going to play out over the next couple of years. And that will essentially make it profitable for firms to use it.